Hi, Tom here. Many beginner traders use MACD by itself as a trading indicator. The problem with this is that MACD can generate lots of signals, especially when the market is moving sideways. That's why in this video I want to show you a simple way to filter MACD signals and massively boost your win rate for trades. But before I show this to you, I want to first discuss what the MACD indicator actually is showing us. Because MACD stands for Moving Average Convergence Divergence, and this indicator consists of three parts. First, we have a line called the MACD line. This is the main line of the indicator and represents the difference between a faster moving average and a slower moving average. On our chart, you can see this as the blue line. When momentum is increasing, this line moves higher at a faster rate, and when momentum is weakening, this line is the first one to move lower. The second line is the red line on this chart, and that is the signal line. This is a moving average of the MACD line itself. The signal line reacts more slowly and is used to generate trading signals. Here's how it works. When the MACD line, which is the blue line, crosses above the signal line, traders often view this as a bullish signal. When the MACD line crosses below the signal line, traders often view this as a bearish signal. The next element of this indicator is the histogram. The histogram shows the distance between the MACD line and the signal line. Think of it as a visual representation of momentum. When the histogram bars are growing larger, momentum is increasing, and when the histogram bars are shrinking, momentum is weakening. This can sometimes give traders an early warning that a trend is losing strength, as well as an early warning that a trend is building momentum. The final concept of this indicator is the zero line, and the zero line separates bullish momentum from bearish momentum. When the MACD is above the zero line, bullish momentum is generally stronger. When the MACD is below the zero line, bearish momentum is generally stronger. This is important because many traders pay attention to where a crossover actually occurs on the indicator. The general rule is that a bullish crossover that occurs below the zero line is often considered more significant because it may signal a shift from bearish momentum towards bullish momentum. Likewise, a bearish crossover above the zero line can be important because it may signal that bullish momentum is beginning to weaken. For this reason, many traders use the zero line as additional context rather than simply trading every crossover they see. Everything sounds great so far, but there is a big problem with MACD. And this is that MACD works great when the market is trending. But once you get sideways movement, then you will get many false signals, and if you enter them, you will ruin any profit potential. As you can see here, there is a moment where the market was very choppy, and this produced many false signals with the MACD indicator. And this is actually why many starting traders, they lose confidence in this indicator, but in indicators in general, where the issue is often not the indicator, the issue is the market environment. So I'm going to show you a tweak that you can take to eliminate all of these false signals. I would say the missing piece is a trend confirmation indicator, and that's just what I'm going to do. I'm going to go indicators, and I'm going to add it can be a simple moving average or an exponential moving average. The trick is you format this so that it's at least a 200 period moving average. Okay, I'll change that to make it a little bit thicker and more visible. What we do in this case is that if the price is above the 200 period moving average, then we only take the buy signals on the MACD indicator. With a 200 period moving average, we are able to filter away some of the false signals generated by the MACD indicator. As you can see, we have a couple of sell signals with the MACD indicator here, but we do not take these sell signals because the price is above the 200 period moving average. And then we have some buy signals here. Not all of them have been filtered out, but basically if we have a buy signal that occurs when the price is below the 200 period moving average, then we do not take it. This is what the strategy looks like so far. We have the MACD indicator and a 200 period moving average. But I would add one more thing. I will call it the final filter. And what I recommend you do is mark major support and resistance zones on the chart. The way you do this is you go to a higher time frame, say 4 hours or daily charts, and basically go to the top left hand corner and select the horizontal line, and then you can mark into the chart the most prominent support and resistance zones, because support and resistance, it is never a line, it usually is a zone. So these are specific points on the chart where the price touches it and either rebounds and becomes a resistance area or bounces off and it becomes a support area. And then once you have these filled in, then you can go to the time frame that you are trading. And even on 4-hour chart, it's also a good time frame to make a note of all of the support and resistance zones. The reality is no single indicator is perfect. They all work under certain conditions, but when you combine the MACD with the trend direction, with support and resistance, you can filter out lower quality setups and massively boost your win rate. Remember, the goal is not to find perfect trades, the goal is to improve your decision making by using multiple confirmations and improving your win rate. Thanks for watching, and I hope you found this video interesting.